Hi, everybody. Carl DePrado, A to Z Business IT. Thank you for joining us today for the webinar on strategies for securing optimal cyber insurance policy rates, a comprehensive guide for companies for small businesses. My name's Carl DePrado. Before we start, I just wanted to give you a quick disclaimer. This is not legal advice. This is not going to be, nor am I going to, and everybody's policies are different. Everybody's risks are different. So you definitely still need to work with a good insurance agent as far as cybersecurity is concerned. But we're going to talk about some of the things that are there that you can do to help yourself. But if you have any questions, especially about how policies are written, I am not an attorney, nor am I a licensed insurance agent, and you need to at least have one or possibly both of them to help you with that final navigation. I am also going to be referring to something called the FTC Safeguard Rule. We're not, again, what we're going to be talking about there is really about an outline of some of the things that are there that we can use to leverage as strategies for ourselves and our businesses to help us get the best rates possible. So, quickly about me, I've been doing this for about 30 years in cybersecurity information technology. I serve as a mentor in a group called the ASCII Group, which has over 1,200 tech companies throughout North America. And what I do for them is I help them with as a mentor. I'm an active member in a partnership with the FBI. I am a husband, father of two wonderful children. So my biggest accomplishments. I'm also two-time best-selling author with Amazon for information security. So, who are we as a company? We are A to Z Business IT. We're we're about an hour north of New York City in Montrose, New York. What we do is we put cybersecurity first with our clients. We do offer support for our smaller clients, and we also will help with larger clients where they just may have an in-house IT team, but they need to have some form of their skill set isn't really as strong as far as cybersecurity is concerned. We watch for our clients. We watch their threats 24/7 and react immediately. And we use the latest security technologies to fight off threats. We also use technology to help our clients grow and grow their businesses as well as securing it. So, what do Uber, CNA Insurance, LastPass, PayPal, Intuit, T-Mobile, Clorox, MGM, Caesars, and the U.S. Post Office have in common? Well, they have all had their clients' personal information stolen from them. And one of the questions I ask is, how does that make you feel? And how does that give you pause to do business with them? And so the other question is, if you're upset now, imagine how your clients would feel if it was your fault and they lost their data. Now, one of the things before we really start in here, because I understand, so everybody's like, well, that happens to other people, but that won't happen to me. And I just want to share with you one thing that's been brought out because cybercrime is so relevant is you are not too small to get hacked. You are just too small to make the news. Let's face it, cybercrime is so rampant that it's just not newsworthy unless it's unique or it's happening to somebody or some company that's of note. And we'll go over some of the things that are happening out there. But just to give you an idea, so we're talking about that because we need to talk about cyber insurance and the fact that it's getting challenging to buy it. And I just want to start off with one little fun fact about cyber insurance. 2022, throughout the United States, insurance companies collected $7.2 billion in premiums for cyber insurance, and they paid out $25 billion. So, that's kind of upside down. And since companies don't like to lose money, well, what can they do? Well, there's really a few things that they can do. One is they can make it harder for people to get insurance. They can make it more challenging for companies to get claims. They raise their rates to cover the losses that they have. And sometimes they refuse claims altogether under technicalities. And we'll go over that as we talk through here. But, look, cybercrime has really made it big news recently. And part of that is as of early September, September 5th, there was a new requirement for the SEC where public companies need to file what they call an 8K report if they've been breached. And literally a couple of days later, we got some pretty big 8K reports that came out. One was from Caesars Palace. The other one was from MGM Grand. That's still ongoing. Clorox didn't have to. I don't know if they had to file an 8K or not. But they right now we're having shortages of supplies that are being blamed on the cyber attack disruptions. They basically can't deliver to their clients the products that they need because of cyber attacks. Caesars, I mean, we'll go. Caesars and MGM are pretty mind blowing because when you think of some of the most secure places in the world, you think of casinos. And what they did was this group of this team. What they did was there was one group called Scattered Spider. And Scattered Spider is reportedly made up of people between 19 and 22 years of age. It's a gang, and they're really good at social engineering. So what do they do? How do they do this social engineering? Well, in a very simple way, they went onto the MGM LinkedIn webpage and they looked for the people, and they saw somebody there that they thought might have the right credentials. They called the help desk and they said, "Hey, I need help resetting my password." They reset it. The person's password that they had high enough credentials that they went to their partners. They had another group called Black Cat or /Alpha. And what they do is they write ransomware. And they said, hey, you know what? They make deals with gangs like Scattered Spider throughout the world. And they say, hey, you get us in, we'll split the whatever we get 50-50. So they use the same technique for both MGM and for Caesars. Once they got the payloads into the systems, they got total ownership of the machines. And so this affected 90 properties. It was reported that 6 terabytes of data was stolen with clients. Caesars paid, I think it's now $15 million. And for the 10 days that MGM was out, they lost approximately, I've heard, as low as 9 million or 8 to 9 million, and as high as $25 million a day. But the expenses are much longer. One of the biggest problems that they've had is now they're involved in 5 lawsuits as of recent reporting. So that their customers have now become people who are really upset with them and would need and feel like they need to be get their money back from that. So this is one of the things, and there are obviously these type of attacks and the expenses. The first thing that Caesars and MGM is going to be looking at, as well as Clorox, is going back to their cyber insurance policies to see, what can they get, what type of coverage can they have under this. That'll be interesting to see. We still haven't seen the fines that these guys are going to be exposed to. Whether the FTC has been quiet about this, and there are a number of other government, other governing bodies that can also weigh in on this. But it'll be interesting to see what goes on. But we're talking 6 terabytes of data, and that includes, if you sign up for MGM or to either of those hotels for their credit card services or their loyalty clubs and any of that other stuff. Well, in that data, they have their clients' social security numbers, their driver's licenses, all this PII data, personal information, personally identifiable information, which is referred to as PII data. And so all of that has been exposed. And that is what these lawsuits are saying is, hey, you've heard us. You were supposed to protect our data. We gave it to you. We trusted you with that. You had a fiduciary responsibility and you were negligent. As a matter of fact, you didn't make the right expenditures, you didn't do the right training, either you were negligent or you were greedy, or maybe a little bit of both. So that's what the lawsuits in general are sort of are claiming as far as this is concerned, and they want reparations. They want to be paid back for the damages that have happened. We also have. So that's kind of interesting. And just to give you an idea, when we talk about MGM losing control of its data, they were down for 10 days. So for 10 days, it wasn't just that they couldn't get into their pay systems. People couldn't get into the hotel doors. Restaurants were shut down. cash registers were closed. And in that case, they were really lucky that there wasn't a fire or any other type of urgency. There wasn't a hurricane, something that would have required evacuation. We haven't heard about anybody being injured directly or indirectly because of this, and which is pretty amazing considering that there were 90 extremely large properties that were all affected by that. And as a general average, 93% of companies that lose their data for 10 days or more file for bankruptcy within 1 year of the disaster. So it wouldn't be surprising to see under this, that they might be looking at a restructure of some sort. I'm not guaranteeing that's what's going to happen, but it's a very realistic possibility. So I want to talk about, like, on an individual basis, what we see out here. One of the biggest attacks that we get is what we call BEC, which stands for Business Email Compromise. About 83% of all breaches that happen inside of businesses on a day-to-day basis come either through email, through spam, through texting, or some type of whether that's through the phone or whether that's through Facebook. So the Phish All Act, when we talk about phishing, there's really three different grades of it. We've got basic phishing, where somebody's grabbing a wide net and they're looking at common vendors, and they're very easy to detect. They don't have your name on it. They may say "Dear Sir" or "Madam," and then what we start to see is a more focused form of it, which we call spear phishing. This is where somebody might have some information about who the person is on the other side, so they'll direct that email directly to them. They may also have a little bit of information of a conversation. They may have broken into the person that you're talking to's email account and pretending to be them. The other one that's extremely hard to see is what we call executive whaling, and this is very targeted and detailed, and it's some of the hardest stuff to recognize. So how do they get all this? Well, a lot of this information is bought and sold on the dark web, and including the email lists and everything. And so my first question is, like, what is the dark web? Well, we're talking about all of the 6 terabytes of data. We're talking about all of these assets that these criminals are stealing. Well, they got to have a place to fence them. And so the dark web, which was created by the U.S. Navy, of all places, and it had good intentions. What they were doing was they built a system that they couldn't take down. The Navy couldn't take down. Governments have tried to take down the dark web and have failed. And what the dark web was designed for was so the dissidents, people in other countries, could have a place to speak and have some freedom to speak. So very noble cause there. We have some legitimate sites out there. The Washington Post has a dark web site for whistleblowers so they can be made anonymous. And so really, from a technical point, the dark web is just an encrypted online content. You can easily access it through downloading a Tor browser. It's not very hard to do. And so basically, but the problem is that if you went to look for these sites on the dark, through Google, you wouldn't be able to see anything. So besides social security numbers and credit cards that are out there, and driver's licenses, and they are monetized, there's actually a rate for how much each one of these things is worth on the open market. How much spending power a credit card might have. How the type of class of a social security. Basically, your data is like the meat market. They grade it accordingly. And even on some of the most dark side of here, this is one of the actual sites from the dark web. And in here, we actually see that there's a guy named Vladimir. You can hire him for about $10,000 a month. He'll make your enemies, and if you're somebody who feels like you have enemies, he will make your enemies miserable. And he will actually has a friend named George, and George will drop terrible payloads, which include child porn, that once it's dropped to your computer will immediately alert the authorities that it's on your computer. And so that, all of a sudden you're getting swatted for this. So this is incredibly nasty what goes on here. You've got some of the most unregulated things that are happening, and it's a perfect place for criminals to be there. And you say, well, what can the governments do? Once the data is up on the dark web, it's really impossible to get it off. We've actually had governments arrest some of these groups that have posted this stuff. They've taken their servers down, but because of the way the web is designed, it just gets replicated onto other servers in other countries throughout the world. So with all of this questioning going on here, will your insurance company protect you from all of that? And well, the answer is, as we've talked about the numbers, it kind of explains why it's getting more difficult to get coverage. And so one of the ones I always like to talk about as far as a story is there was an Illinois-based company. This just happened this year, called International Control Services, ICS. And they bought cyber insurance in March of 2022. To May of 2022, they filed a claim with Travelers for their cyber for, I think it was like $2.5 million. Travelers went back. They looked at their paperwork. They said, oh, no, you didn't have MFA put on correctly. They did an investigation, and ICS said, hey, we're going to take you to court on this. We had a policy. And so they filed the claim in July. In August, not less than 60 days later, the case was dismissed, and it was in favor of Travelers. And they agreed. They said, okay, we're going to let them rescind the policy, which means that they couldn't get the claim covered. And the reason for that was that they didn't fill out the proper paperwork. And what we're seeing now is a normal policy a couple of years ago was maybe 1 or 2 pages of data. And now we're seeing, even on just a simple policy, well over 7 to 8 pages. And a lot of it is technical. And if you don't understand the technical side of this, you can get quite blindsided in these reports, just as ICS did. And the cost of a breach is very expensive. Like just 100 records of PII data, and this comes from erisk.com. You're looking at possibly $480,000 in change. You go to 500 records, it goes up not that much actually. When you consider the records moved up in a factor of 5, that only went up $14,000, less than $14,000. But the problem is that the fixed costs are so exposed here. And, when you go up to 30,000 records, you would think, well, that number should be like, a few $1 million. But in this case, you're only looking at less than double of what it was, even though the records went, was it 300 times greater than what you had before, on the original 100. And the reason for that is the claims can be just as devastating whether you have 100 records that are exposed or whether you have 30,000. So you have some fixed costs there, and we're not even talking about the things that happen to somebody's business. On top of that, as far as reputation and the fact that you can, the time lost there. Now these are not exact numbers. So if you lose 100 records, we're not going to say, oh my gosh, I'm $500,000 in. But in some cases, this is realistically what we're looking at on national averages, and this is what they've done through a third party. So, so what they've looked at is, hey, ransom payments, the payments that they pay to the bad guys, have increased 341%. Axia now will not pay ransom. They've considered it now to be an extortion payment. And the government's looking at ways to make this harder. It's interesting. MGM and Caesars both got hacked relatively in a short period of time. MGM didn't pay the ransom. They were down for 10 days, and and thankfully they didn't have loss of life. Caesars did pay $15 million. They've still got a lot of infrastructure problems because of the attackers being there and not knowing where they might have backdoors through their systems. And we're talking, it doesn't have to be in their servers. It could be in their HVAC systems now. It could be in their lighting systems, the systems that run the stoves. It can be, in a printer. It's so many different places that it's mind-blowing. So they got to go back and clean and purge all of that stuff. But the government's been moving not to pay ransom payments because that money goes to either organized crime or to nation states that are not our friends. And so it's not surprising the premiums are going up 50 to 200%. You know, so the reason we've come here to talk, I know I've given you all of this information, is what will make you a better bet for an insurance company. So one of the easiest way is to be a company that doesn't have the ability, that's less likely to be exposed to a big hack. So meaning into a big crime, being a victim of a crime. So obviously, if you don't have a lot of data, but that would reduce your costs. And the other way is that you're protecting it correctly. So so and that you're doing everything in the correct manner. So there are a number of regulations that control personal data that are issued throughout the United States and the world. I'm just going to name a few of them here. We have GDPR, which is Europe. We have PCI DSS, which is credit cards. We've got HIPAA, which is medical records. We have GBLA, Gramm-Leach Lively Act, which is the FTC safeguard rule. We have FISMA, FINRA, which is for finance. We have CMMC, which includes military. We have CIS compliance. We have in the state of New York, we have the New York Shield Act. And a lot of states follow the New York Shield Act. It's very similar, and it's a very popular writing. So even if it's not the New York Shield Act, you might have something similar to that in your state. That's very similar to that. We have NIST, we have SOX, and they all have three sections. They have an administrative, technical, and physical system. And this is what the insurance companies are looking for: is how well are you guys holding to those types of requirements. Even if you don't fall under them directly, they're using some form of this as a guidance for how they are writing their policies and how they are looking at the risk that you might pose as a potential client. So this is there. So and the other thing we've talked about this is for a breach, you might have multiple, agencies that you might violate. In New York State, if you're a CPA and you lose a couple thousand records, well, not only will the FTC come after you, but the New York Shield Act at the same time. So you can literally have two different agencies suing you separately. And that can run up a lot of money very quickly. So I want to talk real quickly about the FTC safeguard rule. And the reason I'm going to use that is because it came out recently. It's one of the most recent rules. It came out June of this year. I'm going to use that as a guideline of the things that you would need to follow as a company to help reduce your risks. So just to give you a quick history of it, there's 5 parts: purpose and scope, definition, standards for safeguard, elements of information security, and exceptions. So basically, the new policies, the old policy was around since 2003, and they've increased it accordingly. They've added more scope to it, as far as who's going to fall under this. It's less flexible than now. What we didn't know in 2003, as far as technology, we've grown as a country and become much more sophisticated. So it applies to more business types, and we call these non-banking financial institutions. Just to give you an idea, this was the old law before June of this year. It's not even a paragraph. I think it's like 12 lines. The same law as of June, I think it was June 9th of this year. It's three pages long as far as that's concerned. And so the first part, what are the requirements? You have somebody who's a point person, a designated individual who's responsible for this. And that's what the insurance company wants to see. They want to know if there's a problem, who's the person we're going to talk to. And do they know what they're talking about? Are they qualified? So you can designate an outsource. You can either have somebody in-house or you can have an outsource. We are used by some of our clients as a resource for that. You also need to be able to understand what type of data you have in there. You need to be able to authenticate it and monitor, identify The data you need to be, if it's sensitive data, it needs to be encrypted. Do you have multi-factor authentication turned on? If you're no longer doing business with a client, after 2 years, do you have a disposal process to get rid of that? Unless, and there are exceptions, if you're an attorney or CPA, it's up to 7 years. Finance, I think, if you've got a closed deal, it's up to 7 years that you must retain that data. So you also have to have in there the ability to write the program and evaluate and adjust the program as needed. You need to be able to write an incident response plan with clear roles and responsibilities. If you're a public company, you need to have an annual board report, with overall compliance, as far as that's concerned, and what changes are going to happen. So what they're saying here is not only do you write a policy, but you have to update that policy on a regular basis and review that policy because things are going to change. They know that. And so they've already put that into the rules that, hey, we know that this is going to happen. So you as a company need to be aware of that and continually changing that because we don't need to write this again. It takes several years to write a law. So they need to have that in place on a consistent basis. So, on top of that, this one's a little bit technical. They have either a penetration test or you do continuous monitoring with a SOC and with a security operations center that basically tracks all the traffic going in and out of the machines. So you say, okay, well, what are the groups that would fall under this, this particular rule? And this is a good one for if you because it's really pretty large. So you manage a large sums of money, whether it's public or private. Meaning you might be running a small, a trust for one large client. And that would make you fall under this as well, even though it's only one client. You provide loans or credit. So that includes places like car dealerships, boat dealerships, snowmobile shops, any place where you're getting terms, that offers terms and stuff like that, and they're requiring as part of that to get your social security number, identify yourself. That's going to be one of the places that this information has to be taken care of, has to be managed correctly. They assist other people in financing by introducing them to a financial institution. Well, that includes, real estate. That you have agents that fall under that. You connect a buyer and seller. That's called a finder. Has access to non-public client information. Well, they may not be doing the finance side, but you might be a CPA or a bookkeeper who needs that information. You may be somebody who prints checks and now has their banking account number that you're printing on a check. I'm still amazed we print checks in the United States, but we still have them here. And if you're printing them, you definitely need to check your P's and Q's as far as the FTC safeguard rule is concerned. Just to give you an idea, we're talking mortgage lenders, financial advisors, retailers with credit card, home appraisers, check cashers. It's pretty large. And so there are some exceptions to this rule. If you have less than 5,000 people, you don't need a written assessment or incident report or annual report. Now, that's for the law. If you don't have this, if you don't do this internally, it's going to be almost impossible for you to show to an insurance company that you're a better bet, because those are the things that they're looking for when they send out these questionnaires. They're looking to basically in that questionnaire, they are looking for, what type of risk that they might be having to cover. And having that information on hand will definitely make you a better bet for them. And I'm not going to really go into the exceptions here, but, let's talk about what's required. Regardless of whether, the numbers are there, you need to create a team, and you need to select on that team a qualified individual who knows what's going on with both the company and with the and technology wise, so they can make sure, so that they can act as liaison and make sure things are being done correctly. You need to conduct a risk assessment. to see what type of threats are there, what type of shortcomings you have, and how you need to shore those up. You need to create, controls. So, for example, if you have all the personnel records inside of a file cabinet with social security numbers, well, that needs to be locked, and the access to that cabinet needs to be limited as one of the rules there. You need to check them regularly, making sure everything's all up to snuff. Usually 2 to 4 times a year. In some businesses, that can be monthly. You need to encrypt files and emails and apps using services. So that includes, if you're sending information, it needs to go, text messaging alone or email is not okay. You need to be able to encrypt those emails. You also need to use multi-factor authentication or single sign-on, so that you're not just relying on a password, because these passwords, as you can see, are pretty easy to get hacked, and they're pretty easy to get on the open market. You need to have a plan as far as how to dispose of that data after you're done. So, as we said, that data, it's 2 years in most cases, unless you have a legal reason to keep that. But you need to have that planned. You also need to verify with your partners in your apps that everything's being secured. So that means, like, hey, somebody's cleaning your office. You want to make sure that the company that's doing that is running background checks. They're not just grabbing, somebody who maybe has some questionable background. And then the other thing that you want to do is you want to train your employees and your staffs annually. One of the quickest ways to be, one of the quickest things that I do when we're evaluating a potential client, is to find out if they're training their staff. If they're not, the chances of them having a breach are much higher, because it's just so easy to fall for this stuff. And it's required now as far as that rule is concerned, and it's good practice if it's not. And you want to make sure your information security program is up to date and you have a written plan for handling security breaches. Like I said, it doesn't matter. It's not a matter of will your business be hacked, but it's really when it will be. And having a good plan in place helps reduce your overall expenses. And the way I like to explain this very simply is, imagine you ran a school with little children. What's one of the things you have to do a few times a year? You got to do fire drills. Why is that? Well, you need to train the kids, if they're to hear the drill, where they go. They need to make sure that the teachers count off correctly about how many people that the class has, if they're missing anybody. Why do they need to know if they're missing anybody? Well, God forbid the building's on fire, and they all of a sudden the principal or whoever the point person is for the school, first thing that fire department shows up, you go, anybody in the building? They need to know where and what place do you think that they might be. And by doing that, that reduces the potential of loss of life. In the same way, being able to react quickly and know what steps you need to take immediately reduces your overall exposure. So, like I said, you want to have these things. It's not a set and forget it. You have to do them on a regularly done, just as like you do an insurance review. You want to make sure that all your systems are up to snuff. And they have some pretty large fines. They won't go. These type of companies usually don't go door to door. What happens? An event triggers these type of fines, like a cyber insurance claim is placed, identity theft is reported and it comes back to your company, or there's an online bank fraud. There's so many things that can affect you. And and besides, as we've been talking about it, some of the things that insurance will not cover, can't cover, is the loss of revenue. There is, we're talking, 29% of businesses that suffer a robbery, have loss of revenue, and 38% lose 20% or more. So it's and how'd you like to be working with 20% less in your pocket than you have today? And it can also basically ruin the damages the company and the brand reputation. It's more than just short term. The long term, it can really hurt the long term reputation of your company as well. So the surface level costs, just the beginning. Normally, when I talk about a breach with a client, We say, oh, you've got, $4 or $5 million of exposed PII data. It's really easy to look at, God forbid this is stolen, that you might have the potential of losing, up to 5 times that amount in expenses. When you look at the expenses that happen from a breach, the potential of a lawsuit, and also losing potentially your clients as well and having them turn into litigants. It really can be, it can be a poison pill that you cannot recover from. And like we said, that's really why 93% of companies that lost their records have filed for bankruptcy, and 50% of those that filed of that 93 filed immediately. So I know I've been covering a lot here. There's a lot to be done. There's a lot of processes that go in here to make it so that you can make yourself a good bet for the insurance companies, make yourself a good bet for your clients. And if you need any help, this is my booking website. Feel free to book some time with me. We can go through your business, see what potentially might be there. I'm always glad to share information here that can help you. And I thank you for your time here. This is sort of my way of saying thank you for listening to me for the last 36 minutes. So this is booking.a2zbusinessit.com. Thank you so much. Everybody have a great day. Again, it's booking.a2zbusinessit.com. And I'm going to put this in